Hey friends, welcome back to the channel. I'm Iggy, and if you're new here, I cover everything from stocks and finance to CPF and strategies to grow your wealth. Here at the Investing Iguana, we've made waves, ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 768,000 reads and 53,000 likes. Not to mention, we've dropped over 650 videos with more than 300,000 watch hours as of December 2024. Today, let's dive into a hot topic that's been making headlines: Trump's tariffs and their ripple effect on Singapore's economy. Let's break it down together. All right, so what's the deal with these tariffs? Over the weekend, former U.S. President Donald Trump announced new tariffs, 10% on Chinese goods and 25% on imports from Canada and Mexico. Now you might be thinking, Singapore isn't even in the crosshairs of these tariffs, so why should we care? Well, here's the thing. Singapore is a trade-dependent economy. When global trade slows down, Singapore feels it. Think of it like being on a boat. Even if the storm isn't directly overhead, those waves are going to rock you. Now here's where it gets interesting. Trump says these tariffs will stay until issues like fentanyl trafficking and illegal immigration are resolved. But there's no clear roadmap for what actions Canada, Mexico, or China need to take to lift them. It's like setting a goalpost but refusing to tell anyone where it is. How do these tariffs affect Singapore? Let's zoom in on Singapore for a second. Analysts are saying that while these tariffs don't target us directly, they could still slow down our export growth and weaken business sentiment. Why? Because Singapore thrives on trade. Exports are like the lifeblood of our economy. If the U.S. starts importing less because of these tariffs, it creates a domino effect that eventually hits us. Ray Ferris from East Spring Investments puts it simply: reduced U.S. imports means slower export growth for Singapore. And when exports slow down, businesses here start feeling less optimistic about the future. It's like trying to run a marathon with a sprained ankle. You're not stopping entirely, but you're definitely slowing down. Shiana Yue from Oxford Economics adds another layer to this. She points out that business investment in Singapore is closely tied to exports. If exports take a hit, businesses might hold back on expanding or upgrading their operations. But before you panic, she doesn't expect a massive slowdown, just a slight dip in GDP growth by about 0.4% in early 2026. But wait, there's some good news too. Here's where things get a little brighter. Brian Lee from Maybank Securities says there are factors cushioning Singapore's economy: easing monetary conditions, basically cheaper borrowing, major infrastructure projects in the pipeline, and an expected generous election budget. Yep, with elections around the corner in November 2025, we can expect some government spending to keep things chugging along. So while GDP growth might slow from 4% in 2024 to around 2.6% in 2025, it's still within the Ministry of Trade and Industry's forecast range of 1% to 3%. Not great, but not catastrophic either. China, the bigger piece of the puzzle. Now let's talk about China, because this is where things get real for Singapore. China is one of our largest trading partners. Our trade volume with them is 20 times larger than with Canada and Mexico combined. So if US-China trade tensions escalate, it could send shockwaves through our economy. Here's why. When China exports less to the US, they'll need fewer goods and services from other countries in Asia, including us. It's like when your biggest customer suddenly cuts back on orders. Even if you're not directly involved in their drama, you still feel the pinch. And there's another layer to this. Singapore could come under scrutiny from the US, especially after reports surfaced about NVIDIA chips being illegally procured by DeepSeek here in Singapore. This could complicate our trade relationships even further. What happens if this trade war expands? Let me ask you this. What happens if Trump decides to widen these tariffs? Analysts are already calling this the start of a broader trade war. Canada and Mexico have announced retaliatory tariffs on U.S. goods. It's like watching a snowball roll downhill. It just keeps getting bigger. If Southeast Asian countries get pulled into this mess, say through tariffs targeting Chinese companies that have relocated here, it could spell trouble for Singapore too. Ray Farris warns that prolonged trade tensions would depress global trade overall, which would clearly hurt us. But here's an interesting twist. Mansoor Mohiuddin from the Bank of Singapore believes there's still room for negotiation between the US and its trading partners. So while things look tense now, there might be opportunities for cooler heads to prevail. What should you do as an investor? So what does all this mean for you? First off, don't panic, but don't ignore these developments either. If you're investing in export-heavy sectors or companies with significant exposure to China or North America, keep an eye on how these tariffs evolve. Diversification is key here. It's like not putting all your eggs in one basket. Consider spreading your investments across different sectors or regions to minimize risk. And remember, every challenge brings opportunity. For example, if global supply chains shift because of these tariffs, there might be opportunities in logistics or alternative manufacturing hubs. Final thoughts. All right, friends, let me wrap this up for you. Trump's tariffs might not target Singapore directly, but their ripple effects could still slow down our economy, especially if tensions escalate further with China or Southeast Asia gets dragged into the fray. But it's not all doom and gloom. Factors like government spending and infrastructure projects should help cushion some of the impact. What do you think? Are these tariffs just political posturing or the start of something bigger? Drop your thoughts in the comments below. I'd love to hear your take. And if you found this video helpful, give it a thumbs up and share it with someone who needs to know how global trade impacts their investments.